Hey guys, so I want to make a quick video on Affirm Holdings. So Affirm Holdings is a company that lets you do something called buy now, pay later. So basically, you can buy a product and pay later, right? So this is what Affirm offers. So depending on the length of your terms, that will depend your interest rate. So paying 4 is no interest. And then if it's more than 4 months, your interest will be between 0 and 36% APR. That's per year. So in my opinion, a firm, they are in trouble because our unemployment rate has gone up. The CEO was just on Bloomberg television a few months ago. Let's see what he said.
Why do you think it is that so many customers are reporting that much stress on a broader scale as the poll shows?
I'm not sure I can speak to the industry, but obviously Affirm is built on the idea of underwriting every single transaction, not charging late fees, which is important not just because it's such a nice thing to do for the customer, it's also a fundamental alignment between us and the borrower. If the borrower does not pay us back, we cannot benefit. Like, we will lose money if they don't pay us. It's as black and white as that. And so, yes, we may be an outlier in the sense that our customers outperform relative to what sounds like a fairly dark sounding survey, but we're also public. So our numbers are in plain sight at all times. We just printed our last quarter yesterday. Our delinquencies were ever so slightly down year on year, and sequentially, it's still 2.3%, as it's been for quite some time. And during
So basically, if the customers don't pay back, they are in trouble. They will lose money. So the unemployment rate has gone up a tad bit. So as you can see on the screen, for March of this year, the actual rate was at 3.9%. The forecast was at 3.7. So forecast was the estimate, but the actual unemployment rate came in higher. And now check out the date of August 2nd, 2024. The actual unemployment rate is at 4.3. And as you can see on this graph, since May of 2023, the unemployment rate has gone up to 4.3%. If people are not working, people will probably pay their mortgage first, their rents first, their car payments first, bills first, and then they will pay their Affirm loan. And let's go check out the Affirm total debt as well. So Affirm's debt. So they are about $1.1 billion in debt. So let's see. So total debt issued. So this is the TTM. So the 12-month trailing total debt issued was at $12.6 billion, but they repaid 11.16. So that will leave you with $1.5 billion in debt. And that's terrible because we are most likely in a recession because our unemployment rate has gone up 0.2 since these past 3 months. As you can see back on the screen, this is called the SOM rule. So in March, our unemployment rate was at 3.9, and now it's at 4.3. So basically, it's gone up 0.4%. That usually says we are in a recession. And like I said, if people are not working, people don't have money, and people will first pay their rent, their mortgage, their bills, their car payments, and then they'll pay their Affirm loan. Let's go check out the Affirm chart. So, okay, also Affirm, they report earnings this month, I believe. So Affirm, yes, right here. So Affirm reports August 28th, which is Wednesday. And so they've actually been losing less and less money every quarter. They beat their EPS. So last year of 2023, they beat EPS by 18%. Then on their most recent quarter, Q2 of 2024, they beat it by 25%. But like I said, our unemployment rate has gone up a lot in these past 4 months. Also, that will probably push our Federal Reserve Chairman Jerome Powell to cut rates. But the question is he cutting rates because we're in trouble, or is he cutting rates because he thinks our economy is healthy enough for us to get rate cuts and inflation will not get out of hand? Now, this is a chart for Affirm. So we are in the 1-day chart. Let's see the 1-week chart. Yeah, that doesn't make really sense because this company went public in January of 2021. Let's check out the 1-day chart. Okay, so Affirm has support at the $16 level, at the $16 level, at $12.60, and then the final support is at $8.80. Their most closest line of resistance is at $34, $35. And right now, my trading view is telling me to buy. But in my opinion, then this price should go up, but it can hit $34 and then come back down. And as you can see, I put an alert at $34, $33.90. So once it gets there, my trading view will let me know, and most likely I will buy put options on the firm because I think these earnings that are our upcoming earnings, Affirm will not do too well because people are probably not paying back their loans because our unemployment rate has gone up. But yeah, guys, that's what I think for Affirm Holdings. Tell me what you guys think in the comments, and don't forget to like, comment, subscribe, and thanks for watching.